from London. Welcome to the RANsquawk Weekly Wrap. Just going to answer a couple of the questions we've had through to the desk regarding the events this week. So firstly, we saw the Bank of England decision to increase the Asset Purchase Facility, or QE, by £75 billion to a total of £275. This did take the markets by surprise. Many analysts were noting a possible figure of £50 billion. So we did see cables spike down quite sharply on the back of that, with gilts spiking higher by around 100 ticks. So just a couple of notes on what this means for the UK economy. Firstly, looking on a comparative basis with GDP to the US, this would equate to around $1 trillion worth of quantitative easing by the Fed. So that puts it in quite a perspective on the state of the UK economy and how the Bank of England has had to react, especially with the comments from Governor Mervyn King in his interview later on in the day, where he noted the UK economy is approaching the levels seen in the 1930s and the Great Depression, and this is a measure to help counteract that. But quite worth of note are the comments from Andrew Sentance, who spoke before the rate decision, who said any further quantitative easing would be the Bank of England going back on their mandatory principles of inflation, and it is likely to cause inflation in the UK to move higher given the cumulative effect of quantitative easing. And it's worth of note what we've seen happen to gilts today. They've come down another 100 ticks in response to the already higher than inflation data we've seen out of the UK today, and the general consensus that the UK is now moving back in line with the Eurozone. Over the last few weeks we did see gilts tick higher on the basis that the UK was seen as a safe haven compared to the troubles in the Eurozone, particularly regarding Greece and Italy. However, that's now not the case. The decoupling has come back, and the UK economy is looking that it is in for a rough ride in the near future. Then on to the ECB rate decision, where they kept the key rate unchanged. As Trichet explained in his last ever press conference, the ECB's key core mandate is price stability, so they were looking towards the recent higher than expected inflation data, and they kept rates unchanged, however announcing some key liquidity measures for banks, a 12 and 13 month LTRO to help increase the bank's capital reserves, and also the covered bond purchases of €40 billion to help banks ease their burden there. And a lot of focus now on the Eurozone banks after the heavy sell-off we've seen over the last few trading weeks, especially in the French and Italian banks. They have borne the brunt so far, so a lot of focus then coming on to the weekend meeting between German Chancellor Merkel and French President Sarkozy, in which they will be specifically talking about bank recapitalisation, and that will also involve some talking about the EFSF. There is some disagreement between both countries regarding the EFSF, the French wanting a liberal EFSF that is allowed to recapitalise banks, and Germany being pretty much the ultimate backstop in the Eurozone, unsurprisingly disagreeing with France on this. So a lot of momentum then hinging on this key meeting on the weekend, so we'll be keeping a close eye out for any results. The banks then really are the key for the Eurozone and how we move forward, especially with Mario Draghi replacing Trichet at the next ECB press conference. We'll be seeing how he influences the ECB and its ways of methods of moving forward to help the Eurozone come out of its slump, as focus has slightly moved away from the peripheral debt situation, with the S&P somewhat helping, particularly in Spain. We've seen their 10-year cash bond yield moving below the key 5% level in recent trading sessions, with the Italian yield still sitting above 5.5%. However, focus has moved away from there slightly and more onto the banks and how we can save those banks, particularly with the influence of these LTROs and covered bond purchases, and especially now discussions on the EFSF going forward. So we can keep a close eye on this weekend meeting and what emanates from that, especially in relation to the EFSF. But that's enough from me really from this week. It's been a pleasure speaking to you on the Squawk. We hope you have a great weekend. We enjoy doing these weekend videos or these weekly wraps for you, so we'll be continuing, and I'll see you bright and early Monday morning for all you listeners out there. Thanks a lot.